Hang on 1 second. Oh, when is events? Okay, let's go house shopping. What it takes to be a homeowner in today's climate. So what this presentation is going to include is who we are, Breland's Universe, why it's important to own real estate, how do I get started buying a home today, and what are the financing options to purchase my first home. And in addition, what programs are out there to assist me with my purchase. And next steps would be, how do I get started, a Q&A, and then we have a giveaway. So who we are. I'm A. Fitzgerald Breland, proprietor, principal of Breland's Universe. We are an international real estate concierge. We do all things real estate for our clients. My background includes an undergrad degree from Kentucky State and a master's degree from Arizona State. I started in corporate America selling consumer goods, then transitioned to healthcare sales, where I was a pharmaceutical sales rep for a Fortune 500 company. But I always had a bug in real estate, right? I don't know where the bug came from. A family member living in California. I was working for a major company in California, and my uncle-in-law, he dabbled in real estate. I think he was working at Boeing or one of those major military development firms. And he dabbled in real estate, sold a couple of houses here and there. That's what maybe planted the seed. And then from there, I've always had an interest in it. And back in early 2000s, the brainchild became a reality. So I got my license in real estate a couple of years back. but kind of dabbled in it and then stayed in front in healthcare sales and then jumped into healthcare and then transitioned into IT, where I was a IT sales director for a couple of major IT firms, one based out of Silicon Valley, which was kind of fun and interesting. But then I said to myself, you know what, I'm getting older. What's my legacy going to be? Let's do this real estate business and make it a lifestyle. So back then, about 8 years ago, I dove in headfirst into real estate and been doing it ever since. What we do. Now, what we do is we assist our real estate clients with purchasing real estate, primary residence, and investment properties. We also help our sellers and owners get the highest and best value for their property. We educate our clients on the current real estate climate to help them make the best educated decision that they can when it comes to buying real estate. Why do we do it? We see this as an opportunity for people to own things. You know, this world is about ownership, and you don't have any power unless you own something. Stop renting and owning something. Another reason why we need to own real estate, if you look at these two stats, right? Home ownership rates by region. We are in the Hello, hello. Can you hear me, Rohan? Can you hear me okay? Hold on, let me get you off of mute.
Yeah, I hear you loud and clear, man. Sorry for being late.
There we go. How's everything?
Good. How's your day been?
Been busy, brother. Been busy, but I'm excited about being able to talk. You probably gonna be I may have one or two other people join tonight, but since I got you on the horn, let's talk. So you're already a homeowner, right?
Yeah.
So you pretty much know what that process is like.
It's been a while. I mean, I've had this house for quite some time, so it's been a minute. So again, I've not done it recently. I've had this house for quite a while.
Okay, all right. So let's talk about it. How do you get started owning property? So are you so let me get what you want to get out of this conversation. Are you just looking to get an overview of what the home ownership process is like? Are you looking to get into an investment property? I remember you had talked to your dad about the investment.
Yeah, well, again, my overview again, kind of a refresher. Plus, ultimately, initially, I want to do more flipping of homes before I even think about even the whole thing about renting or anything like that. Not saying I'm about to sell my house anytime soon, but it may come to that point. But ultimately, if I do get into it, I would like to maybe just get some income from just flipping homes and just see how it goes.
Well, I'm gonna tell you, brother. Right now, the real estate market is piping hot. A lot of properties are selling for your asking price, which is typically the market value.
Mm-hmm.
A few of these properties, man, are going for over asking. So the property inventory is very low. So they call this a seller's market.
Mm-hmm.
You get top dollar. You can pick and choose from multiple offers. So let's dig into the nitty gritty of that. And then on the tail end, if you want to talk about investments, I can talk a little bit about getting started into the investment side of things too.
Sure. Okay.
It's pretty easy, man, when it comes to getting real estate. Hold on, let me back up. Where am I? So I talked about that. Let's just get into the.
No, you said I would be the only person calling it tonight, or you said others might be coming?
I may have one. I had like a couple of people yesterday. A couple of people canceled today, so it may just be you.
Okay.
But either way, it's all good.
Okay.
So the basic premise in homeownership is easy. You really want to just know what your options are. You want to qualify for a mortgage and then get pre-approved.
Mm-hmm.
First thing you want to do is you want to know what you're doing when you get out there in the marketplace, right? You got to know what your options are. And mainly what that means is how much you think you can afford per month and how much the lender is going to lend you. And all of that is based on your income and what your debts are, right? How much can you afford on a monthly basis to spend for a mortgage? Typically, lenders look at you using about 33% of your monthly income to pay for your mortgage. So if you're making $1,000 a month, you're going to be spending about $300 to $330 for your mortgage.
Mm-hmm.
In addition to that, they look at how much money you have saved for a down payment. You can also get, they call it gifts. You can get down payment assistance from family or friends, but they call it seasoning. So you want to have that seasoned gift in your bank savings or checking account for about a week or two. And it really depends on the lender. Sometimes you don't really need to season that money, but typically when you're doing a traditional loan or a mortgage, you want to go to 7 days for seasoning. Because if it's over $7,000 to $10,000, they're going to ask questions, right? But if it's sitting in the bank account for an extended period of time, they won't question it because it's been there for a while. In addition to the down payment, you want to see you want to think about how long you want to stay in that home, as well as figuring out the different types of loans that would best suit your needs. Because they have a whole plethora of loan options. I'll go into that briefly as we get into the presentation. But those are typically some of the things you want to think about when you first start shopping for a house. And these are a couple of the conventional loans. Can you see my screen all right?
Yeah, I'm good.
Okay. These are some of the traditional loans that are out there. You got your conventional fixed rate, the Bank of America's, your Chase, your Fifth Third banks, where they have a fixed criteria and a fixed interest rate that you're going to stick with. They have the adjustable rate mortgages, what allows you to, over an extended period of time, as the mortgage rate dips and goes up, you can pick, this is where I want my mortgage rate to be, and it sticks there, but you get a little bit of time in that window. Sure. That's why they call it adjustable. You get 100% financing. They have programs out there or institutions out there that will finance you at 100%. Then you also got your FHA and your VA loans. And qualifying for a mortgage, what do you need to know to qualify?
Sure.
Credit score, right?
Mm-hmm.
That's probably the main thing in your income. Those are the two main factors.
Sure.
And when they're looking at your credit score, what does that allow you to do? It allows you to have a scalable down payment, scalable interest rates. And typically when they talk about PMI, which is a private mortgage insurance, if you have more than 80% of your mortgage in a loan, they're going to ask for private mortgage insurance. Are you familiar with that?
Yeah.
You know what that is?
Yeah, I had it before very briefly.
Okay, yeah. And then the other thing that credit allows you to do is to identify what type of loans that you can be qualified for. Mm-hmm. And what factors determine your mortgage, your credit history, your taxes, your monthly expenses, and how much money you've been able to save for down payment.
Sure.
Are you familiar with debt to income ratio?
Yeah.
Do you know what that means?
Pretty much what it sounds. How much you accumulated debt to your relative income?
Exactly. It's your monthly debt versus what you bring in for income every month.
Sure.
And that allows institutions to, and that's situational. Each institution, they have a standard practice, but some institutions are willing to work with you with your debt to income, just as long as they can get you qualified for that mortgage.
Sure.
And so pretty much once you're able to identify type of house that you want, what your mortgage rate is going to be, getting qualified for that mortgage, that's when you get into the pre-approval process. They have two types of pre-qualifications. Mm-hmm. One is a pre-qualification, called a pre-qual letter. You get a pre-approval letter. Are you familiar with the difference between the two?
It's been a while since I've seen any of this, so this is all a refresh again. I haven't seen this for quite some time.
Okay. Well, a pre-qualification is qualifying you based on basic information, your income, what you want to pay every month, and just giving the lender a few of your debts from they say, all right, based on that information, Rohan, we want to qualify you for $750,000.
Sure.
Then all you have to do in order to get pre-approved is provide the following documents: 2 years of W-2s, your tax returns, 2 months worth of bank statements, your most recent paycheck stuff showing you what you made in the last 30 days. And if you're self-employed, the profit and loss statement over the past 2 years. And sometimes they may ask for additional information, just depending on what that information provides them.
Sure.
If you have like student loans, or you have, what do they call it? When you're on, you have a child and you have to pay child support.
Oh, yeah.
That's coming into play.
Mm-hmm.
So the main thing I try to get a lot of my buyers to understand, if you're serious about buying a home, it's a do's and don'ts, right? Do's, you want to make sure that you keep concise records of your banking over the past couple of years. You want to continue to make your rent payments on time. You want to make sure that you're current on all your credit card payments and car payments. Try to avoid job changes. And make sure that, like I said earlier, that your down payment has been seasoned for at least 7 days prior to getting to the closing table.
Mm-hmm.
And then you want to make sure that, I mean, what I'm finding with a lot of my buyers is that they're not communicating with their loan officer throughout the process. It doesn't have to be like you're going to the dentist to get teeth pulled, but you got to be consistent, because everything today is documentation when it comes to lending.
Sure. Now, the only thing that for me is because I've had, from contract jobs the last couple of years and I have a permanent job now, to what extent will that be a factor against me?
Because you haven't had a job in the past 2 years?
No, I've had contract roles in the past couple of years. Now I have a permanent job now.
So a lot of lenders want you to have one consistent employment over 2 years. But because you are a contractor, they look at what you've done contracting in the same industry, doing the same roles,
Mm-hmm.
the same thing as it being consistently over 2 years.
Okay, fair enough.
What you don't want to do is you don't want to take out any new loans. You don't want to get no new credit cards or even apply for them because your credit rating, right? You don't want to open or close any new credit card accounts.
Nope, don't do that.
Transfer balances, right? And you don't want to pay off any collections without having a conversation with your lender. And you want to try to stay as right at the snapshot that you want to start buying that car, buying that home,
mm-hmm.
consistent with everything that you're doing.
Got it.
At least until you close.
Sure.
And this is some language and lingo that we use in the industry: amortization tables,
sure.
appraisals, deeds. These are just terms that some of my clients like to utilize just so they can get an understanding of how the process works. Because it can be taxing for some people if they're not used to it.
Mm-hmm.
You've done this before, so you understand what that process is like.
Yeah.
All right. And so let's look at some of the financing options, right? Once you've been able to talk to your lender and the lender understands what your process is, you have some options, right? Sometimes you don't need a lender. If you have all cash, I have a buyer right now that's going to sell her house in California. It's probably going to come out with maybe $500,000.
Mm-hmm.
I have property, all cash, right? But you don't need no lender. You got a pocket, right? Mm-hmm. But some of the other programs that are out there that you can access through a lender, the VA mortgage if you're a military person, USDA mortgage, which is something that's similar to living out in the rural areas, buying farms and acres, and you want to do things with that. FHA mortgage is the federal mortgage that's insured by the federal government.
Sure.
Right, and then you have your traditional mortgages, which typically ask for a 5% down. For a long time, if you went to a conventional mortgage, it was 20% down. Mm-hmm. But because banks are in the business of making money, they do creative financing within their own institutions, which allows them to bring down the down payment a little bit more for you. Right. Yeah. Right. And then you can use some of your retirement to purchase a property, to purchase your home as well, without having any tax hits on the money that you have in that IRA or that retirement account.
Sure, got it.
And then some other things that a couple of my buyers have been looking at and interested in: seller financing. Are you familiar with that?
I knew of it, but I don't recall it right offhand.
So seller financing, let's say you own your property right now, all cash.
Mm-hmm.
You want to sell it, and you are open to allowing someone to buy it, have the traditional lending mortgage to buy your house. What you do is you have a conversation with that buyer. You say, hey, Mr. Buyer, if you want to purchase my house, I own it outright. You bring $10,000 to the table, and then you pay me $1,000 a month. You take over this house.
Sure.
Right. So what happens is seller financing allows you to be creative in getting your property off the market. It gives you income, instant income monthly without monthly rent. Plus, you get a significant down payment. And what happens is maybe 12 to 24 months, maybe 36 months in, that buyer is working to get qualified so that they can get a traditional mortgage, pay you out, cash you out outright, so you go on, and then they can work with the lender who gave them the money for that property that you just sold.
Got it.
And lease purchase it's a simple process. It's two agreements, right? It's a lease agreement where you're leasing the property while you're getting qualified to buy a mortgage, to get a mortgage from a bank or a creative financing institution. Mm-hmm. Once you get that, right, you get to a purchase agreement, right? So it's just like renting a property, renting an apartment or a house. And then once you get your financing in order, allowing you to buy that house.
Got it.
Let's look at some of the programs out there, because this might be something that you'd be interested in. I know you're probably familiar with Georgia Dream.
Yeah.
$5,000 for your standard Georgia resident.
Well, again, I'm not a first-time home buyer, so again, I don't qualify for that.
Right, exactly. But they have others out there. They got plenty of them out there, brother. Mm-hmm. If you're a essential worker, a first responder, military, a healthcare professional, they give you $7,500. Hold on, Rohan. Okay. Sure. All right, cool. $7,500 for the Georgia PIN. We got Georgia Choice for disabled borrowers. That's $7,500 as well. Let's look at some of the programs. I think I might have pulled them up. Some additional programs out there is called Chenoa Fund, where they allow you to make 3.5% down. Invest Atlanta. Invest Atlanta is really nice because it's for the city of Atlanta, but it gives you multiple ways to get qualified to purchase a home. It sends you through, it's like a smaller version of NACA. Are you familiar with NACA? So NACA and Invest Atlanta, what they require you to do is get educated on finances, understand how to budget your money. And over an extended period of time, they certify you. Your certification, you have to go take a couple of classes. You have to see that you've been able to hold your own over an extended period of time, that you're managing your budget well. In that process, they're asking you to save maybe 10, 20% of your money, putting that away in a savings account, so that at the end of that term, that agreement, you can actually use that money to purchase a home. You're certified in budgeting and understanding finances, so they trust that you're going to stick with your plan once you purchase the house.
Got it.
That's a really good incentive. The key is it's only in select areas, like Vine City, some of the communities by the football stadium, right? Lower income.
Got it.
Communities that are gentrifying, right? They're incentivizing people to buy into those communities. And this is a really good program for that. Talk a little bit about Georgia Dream. Gwinnett County has some programs out there. Cobb County has some programs. Then they also have programs out there that assist with specifically a down payment program. And within reach is what they call a second mortgage. So what they do is, if you don't have down payment money and you qualify within the reach program, they give you the down payment money, right? Well, it's not given to you. They approve you for the down payment money. And all of that is a second mortgage. Mm-hmm. It's a taxed on the back end of the process to where your first mortgage, so you got an initial mortgage with Bank of America. That's your primary mortgage. It reach is a second mortgage, and it takes secondary position in regards to mortgage priority, right? And the only time you pay that back is when you sell the house.
Got it.
I went through Invest Atlanta. Let's show you what I mean about some of the things they have going on here with Invest Atlanta. See what I mean? So they have like the 4.0 program. All you have to do some of their requirements, and they ask for 3.5% down grants that come to you. Vine City is one of the communities that I just talked about. You have an affordable home program. They give you up to 14 grand.
Where's Vine City, by the way?
It's next door to the new stadium, the new football.
Okay.
Yeah. And then they also give you renovation mortgage, renovation loans to help. Let's say you buy a property in Vine City, but it needs some work. They give you money to help upgrade that property. You have in-town mortgage assistance programs. There's a whole bunch of things just specifically for Invest Atlanta. So the Roswell area. So I might not. I mean, unless you're willing to relocate, this might not be the best program for you. Would you consider moving into Atlanta?
Well, right now for me, it's not even about selling the house that I got. I'm pretty cool with the neighborhood I'm got. Again, for me right now, this is about just purchasing some properties and just seeing flipping right now.
Okay, all right, no worries.
Sure.
And NACA is that program that I was talking to you about that allows you to budget, takes you through a process of getting you educated on what it takes to be a homeowner. Good program. These programs are, designed for those low income buyers who have never bought a home and are aspiring to be homeowners, but they don't have the educational. They don't have the education to understand how to budget, what the process of home buying is like. So it takes them through that whole program. This is a nationwide program. And for our community, it's been pretty successful in getting a lot more of us to buying a home.
It's good.
Yeah, it really is. So the only other program that I wanted to show you was, hang on, called Teachers Next Door. And what that is, that's a program similar to some of the other programs that I showed you, but it allows you to utilize different types of financing options. They do education as well. The beauty of this program is it's incentivized to people who are in the workers lane.
Sure.
From teachers to public servants to active duty military. And let me just show you what this program allows people to take advantage of. Right here. All of these goodies.
Okay.
Right? $4,100 in grants. They give you up to 10 grand in down payment assistance. You don't have any fees and applications, no upfront fees, no broker fees. You get preferred interest rate at the time. Appraisals are free. Home buyer representation is free because they have their own real estate agents. I'm a part of that program. You get access to properties that are in foreclosure. Discount on your title when you're doing title searches. It allows you to be a part of the Fresh Start program that helps you with your credit. So this program is really good for essential workers because it gives them all these freebies. I have a VA, a veteran right now that's going through this program and he's really getting educated. He's taking advantage of it. He's been pre-approved for 400 grand.
Okay, cool.
When he uses the VA loan, he can't have to put anything down.
Okay.
So, yeah. So in a nutshell, that's pretty much the first time home buyer program is all about.
Mhm.
Let me slip. Yeah, other than that, man, that's what I talk to my clients about.
Got it. Cool.
You got any questions for me?
Not offhand. I mean, I know that we talked, again, I'm going to be talking to my dad about some properties down in Florida. I mean, we don't have like a plan to say, yeah, we're definitely going to do it like right now. But the idea is that being that, of course, he's got more time on his hands to actually scope out some properties probably in his area. So I know you said you have some resources down there about, again, the whole idea of flipping homes. Again, I'm sure there's some strategies behind that you might be obviously aware of, or what is the best approach to that?
Yeah, so flipping homes is pretty simple. All that you really need to do is basically have 10 to 20% down on a property that you want to purchase.
Mm-hmm.
And then once you identify that property, you have financing behind that, not only to purchase the property, but you have money to rehab the property.
Okay.
Right? They call those hard money lenders, creative financing, financial professionals.
Mm-hmm.
The idea is to allow you to do this as a business, right? If you want to fix and flip, it's a business. So the money that you're getting is allowing you to navigate as a business. And it's mainly finance based in regards to you being educated and understanding that numbers play a huge part in fixing and flipping.
Mm-hmm.
Right, from the appraisal for the amount of that the property is worth versus the time that you're going to put into rehab, get the property back up to market value or if not higher,
Mm-hmm.
able to hold on to that property, paying for the utilities on a regular basis until you get that property sold. So there are nuances to being a fix and flipper, but once you get your feet wet, you do it once or twice, it's pretty easy, right? This is a website that's pretty good for first-time flippers because it really gives you a breakdown and an explanation as to each step in the process.
Okay.
On whether or not an investment property is the best way to invest.
Sure.
I think the key thing is assembling a team because you have to have a team that knows what they're doing and is not dragging their feet so that you can try to get things done in a timely manner so that you get your timelines.
Sure.
The biggest thing about fixing and flipping, or even fixing and holding and using it as rental income, that you want to make sure that you manage your money effectively. Because a lot of people lose a lot of money watching HGTV, right? Thinking that all they have to do is buy a piece of property and put a little elbow grease in it, and then I put it back on the market and I'm gonna make twice the money that I invested in. A lot more nuance to that. It's being done, right? But it's being done strategically. And you have that mindset, Rohan, where you have a finance background, so you understand numbers.
Sure.
As long as you can get your team together to manage the numbers, everybody can make money, right?
Sure. I assume when you said mean team, you're not talking about just the people who are actually doing the refurbishing of the home for you. You mean like another team beyond that?
Yes, what I mean by team is these guys, a good real estate attorney, insurance agent, home inspector, appraiser, contractor who's going to do the work. That's pretty much the team because those are the people that you're going to need to get things done.
Okay.
And that's pretty much it when it comes to investing, man. I think the best thing to do is get off the sidelines, just figure it out, right? Sure. Because the other thing is, what I tell a lot of my clients is, money sitting in your savings account is great that you have the money saved. Mm-hmm. Billionaires allow their money to make money while they're sleeping.
Sure, I get it.
So you want that money to be invested in stocks and bonds or real estate because that while you're sleeping, you're making money.
Yep, I get it.
That's right. Pretty much it, my friend. Did you want me to send you over? I can send you, I have some giveaways. What I can do is I can send you over a Homebuyer guide.
Yeah, please do.
Just a breakdown of start to finish, right? What you need to know to effectively be a home buyer without having to go through a whole bunch of headaches.
Yeah, I can do that. Yeah, please do.
I I can shoot that over to you.
Appreciate it, brother.
And I'll also send you over this link. This is a good website to get started for investors.
Sure.
And a couple more things. Are you a part of Clubhouse?
Yeah, I'm on there, but I have not done anything on there. You're the like second or third person. I mean, I think you were the first person to bring it up. No, second person to bring it up. And I got my homegirl. Again, of course, there's a lot of things in Clubhouse, but again, I've not really gotten on there to do anything. But I know you said you use it a lot for networking.
Yeah, it really is a good resource, brother. They have a lot of exceptional professionals that are they're on that site, giving a whole bunch of great information. I've actually gotten a couple of clients out of it. But if nothing else, it's a good resource to have in regards to information.
Okay. Yeah, I'll look and see if there's anything real estate related. And a friend of mine told me about using Clubhouse, in a totally different way, because I want to like increase my knowledge of Spanish.
Okay.
And especially because like me and Trent and I have been hanging out at a couple of spots lately, and the women have been really looking wise, again, not so much good for dating potential, but again, since a lot of them don't speak English, it would be good to have have that knowledge so I could use it to my advantage.
What do you mean?
To have a conversation with folks.
About realist? About what?
No, just talking. Just have a conversation with people in general. Just
yes.
Yeah, just language skills. Yeah, just language skills. Yeah.
If you can hang on for 2 seconds, I have a first-time investor. I would love for you to have a quick conversation with. You got a second?
Sure, I talk. Yeah.
I just want him to I'm working with him now. He's been trying his damnedest. He did actual fix and flip recently, and I want you to hear what he has to say about his experience, because he's a good guy, brother, young dude. Well, he's around our age, but good guy, good dude. So while I'm waiting on him to jump in, how's everything going on your end, man?
It's not been bad. I mean, job's been going good. People still like me. I keep on hearing that apparently they are getting some good reviews, like in my performance. One guy said to me today, he said, listen, I'm not throwing shade against any of the other scrum masters or coaches we had before, but I said he spoke to one of the other members of the team, said they wish they had me from when they started.
Really?
Yeah.
That's what's up, baby.
So this is on the client side. And I still got to help do some things with them because, as a consulting firm, it's not just serving the client. You got to do, since they're privately, they're employee owned, it's employee owned. I got to help them in business development. I maybe help them do some blogging for them. That's part of my goals for 2021. They said, they have some goals that we have to set up. And part of it is help, do some business development for them.
Now, is it for the client or for the company that you're with?
For the firm itself.
Okay.
So it's over and above the 40 hours I have, 40 or whatever hours I have dedicated to the client. I've got to put some extra time in just for the benefit of the company outside of that. Oh,
that's what's up, man. That's good, dog. Congratulations on that.
Yep, but we all have to kind of put some time into that. But so far, it's good on that side. And I eventually got to get back into training. I've got to rejoin a gym. So I told a couple of my buddies, I'm probably going to join the gym by me at some point.
Okay. That's what's up, bro. Hey, Damon, are you on?
Yes, I am.
Hey, bro. This is Rohan. Rohan's a good friend of mine. Rohan, Damon, Rohan.
Hey, Damon, how you doing?
Doing all right. Nice to meet you.
I wanted you to jump on, Damon, because this is a future real estate investor here, Rohan. And I want you to tell him about your recent experience with your last fix and flip.
You want me to say it?
Yeah, can you tell him? You don't have to give all the. You don't have to give him. You don't have to be as detailed with him as you are with me. But just tell him what the experience was like, because he's going to be doing some investing with a family member. And
okay.
I thought it might be good for you to just give him what you're. I mean, you could be candid and honest. To be frank.
Yeah, initially it was a very good experience, a good learning experience. I mean, there was, a little bit of a downside, but it had more to do with the the personality of the person I was dealing with, but overall, it was a great experience. I had a church member actually help me get started by giving me a loan to qualify for a hard money loan to get a property,
Okay.
which I was able to get and was able to get it fixed. So this person was also a real estate owner. She owned her own companies and a number of properties. At any rate, there was challenges, but at the same time, I learned the process and was able to sell the house. The only downside was not the process itself. It had to do with the integrity of the person or the woman that actually helped me out. Towards the end, she kind of burned me. But the process in and of itself was fine. I know that the process worked. I can't wait to do it again.
So about how long did it, again, I know it's going to vary from one situation to the next.
The whole process took a little more than a year.
Okay.
From start to finish.
Understood.
And actually, it could have gone a lot faster, but I was learning. I was basically under her guidance. She was the expert, and part of my problem with her was her inattentiveness. And so it dragged the process out. And then at the last minute, it got real messy. And I ended up paying for certain things at closing, which were things that she did, but because my name is on all the documents, I'm responsible for.
Understood. Yeah, I get that. Okay.
But that goes back to what I talked about earlier about having a good team.
Yeah.
Because every piece of that plays. Now let me ask you this, Damon. Who did you have on your team? Like who are your experts in regards to contractors, real estate attorneys? Can you talk a little bit about that? Who they were?
Well, initially it was her. I followed a lot of her guidance towards, I guess, maybe towards the end of it or halfway towards it. I began to look for other people, starting looking for other lenders, looking for other contractors to do work. And I believe I reached out to you for some of your contractors. And I talked to a couple of other people that are real estate agents. Nothing ever came of those processes, but I began to start looking elsewhere to build a team, because what I began to see towards the end was I cannot rely on this person that's not being attentive, and they're supposed to be the expert in the field. One of the things that you need when you're doing investing or fix and flips, you need to stay on top of all your P's and Q's. Sure. And
what do you mean by that?
With documents that need to be submitted for like, to acquire loans or just the whole process. If like in my case, she was the real estate agent, she did not tell me all the things that I needed to bring to the table. I ended up having to just contact the lenders directly and getting what I needed from them directly so that I can supply it myself directly.
I see. Okay.
And so, I mean, the plus side about that, it got my feet wet. I know how the process works, but when you're dealing with someone, I call her an angel investor that was, actually has, real estate experience, it would have been much better to actually tell me everything that I needed up front rather than, excuse my language, half-ass it, which dragged the process out.
Right.
So, because and also she was the one that was promoting the house, because putting on the MLS for sale and whatnot. She did not, in my opinion, promote it effective enough, especially getting it on the market before, because winter months the housing market slows down traditionally anyway. And we had acquired the property in around August that year. Mm-hmm. And so, if she had promoted it on her end, I believe it would have sold sooner and I would not have run into as many problems. But being at the time that I didn't know better, I kind of followed her guidance on that. Now that I know if my agent is not doing what they're supposed to do, I'm terminating the contract with them and I'm getting another agent and get that property sold.
You should have did what I told you when we were talking about it.
Absolutely.
Excuse me.
Absolutely.
So with that being said, about how much, if you had done things, again, it's kind of hard to predict it. I mean, how much faster would it have been done if you had, say, followed more Breland's approach from the beginning?
I believe we could have sold the property within 3 months. You know, it was the property was in Lithonia, it's a hot market. And I did some side research myself. The neighborhood, the houses that were sold in that area was hot. So I mean, you have a hot market and you have a property that was. I mean, it didn't have super major issues. It didn't need a roof or anything like that.
Okay.
Yeah, I believe it would have sold in 3 months rather than it taking almost a year.
Okay.
And the reason it took almost a year because she was the one that was promoting it. And like I said, her problem that I have with her is inattentiveness, which is why I don't use her anymore.
Sure.
Because when you're dealing with properties, you're dealing with a lot of money, you're dealing with a lot of liabilities. You cannot have someone on the team that could mess that off.
All right. So with that, so you do have a team in place right now for the next time you go in, right?
Yeah.
Okay. And so was she the person who helped assemble the team, or did you kind of get it on your own? Again, you said you didn't use Breland's some of his contacts on the contracting side, but in terms of how did you assemble the team from the beginning?
Well, you talk to people, like him, and ask questions. And one of the other things that I did, I started reaching out to other contractors and explain the situation as to how they would be of help. One of the things that was eye-opening for me is there are some contractors that will take payment at closing.
Right.
And that's one of the things that's helpful. Like if you do not have cash up front to finish whatever repairs are needed, there are some contractors that will take the payment at closing. When that property is sold, then you can pay them for their services.
Right. And Fitzgerald, do you think that's a good approach, or does it vary?
It depends on the project, right? Because a lot of the contractors always ask for 25 to 50% up front to get started, but it depends on the project. But it really depends on the contractor. So, one thing I will say about this business is it's the 80-20 rule, Rohan, and it specifically applies here in real estate. You got that 20%. They got to be on your team because if not, you're overseeing the contractor. The inspector might be a little iffy if you don't have a relationship with them. The real estate attorney, just wants to get paid, won't give you the ins and outs of the contract, right? Next thing you know, you went into a situation like Damon did, having to come out your pocket, and you weren't expecting that at closing, right? But at the end of the day, Damon, you don't have to tell us how much were you able, after all of this stuff happened, were you able to make a profit?
Oh, yes. Yeah, absolutely.
And Rohan, that was his first deal. No experience, right? Going about it just based off his own due diligence.
Okay, fair enough. All right. I think I got no other questions. Well, how about this? How soon do you think you'll be looking to get another property?
Well, right now, what I'm trying to put together is a line of credit. I'm looking at different ones, but what I'm working on right now is getting a line of credit and getting some additional funding. But as far as looking for deals and properties, they're out there. I mean, they're literally out there. Atlanta is a hot market. You're not gonna have a hard time finding a deal. What you want to get on your end, or what I want on my end, is I want to have my funding or my line of credit put together so that when I pick one, I can get moving right away.
All right, fair enough. Cool. Well, I've got no additional questions right now. Sounds like you're on your way. So good. I appreciate you coming in and, sharing your story with me. I appreciate that. Thank you.
No problem.
Hey, thanks guys for your time. I'm definitely going to reach out to you, Damon, because I need to get, I still need to get those stickers.
Okay.
For those bandit signs. But Rohan, thanks for your time, bro. Check
All right.
your email later on today. I'll be sending you over that home buyer guide as well as that link to the first time investor, so you can get a little bit of education on that. And if you need anything from me moving forward, I mean, dude, we're gonna, I'm gonna see you on a regular anyway. But
Sure.
in time, if you have other questions, you know how to reach me.
Of course, man. I appreciate it, brother.
All right, my friend. Thank you for showing up, man. And it's going to be happening probably weekly. I'm going to do one day for first-time home buyers. It's going to be Wednesdays. Thursdays is going to be for investors. So,
Sure.
And I'm going to have more people come in, experts come in their space, in the investment space. So let's stay tuned.
All right, we'll do.
Thanks, everybody. Talk to you soon.
All right, take
All
care.
right.
Good night, gentlemen. All right, bye-bye.
All right. Bye-bye.